My name is Enoch Kariuki. I'll start off by giving you some background about myself because I think it helps you understand the way we think about opportunities. And typically, the step where we come in is right after you've been invested in the company and you're getting to a point where you need more money to scale up a clinical trial, to scale up manufacturing. And the way we think about it, so I'm a scientist like most of you in the room. I trained in pharmacology, did a postdoc fellowship at Bristol Myers Squibb, and I worked in the strategy group there. So part of my job was to help identify companies that we could buy or opportunities that we could license. So a big part of how I think when I see a deck or a new pitch call, a big part of how I think about it is, will this be interesting to me at Bristol Myers? And after Bristol Myers, I went back to business school and then worked in investment banking. So I did my fair share of IPOs, sold my fair share of companies. And that's part of how I think about opportunities. Is this an IPO-able story? Can we sell this company to somebody? And essentially, working in private equity, I'll talk about HIG Capital, but think of HIG Capital as representative of most of the private equity industry, and just the way we think about opportunities. So as it was mentioned, we manage money professionally on behalf of governments, on behalf of wealthy families, on behalf of endowment funds, the Yale Fund, the Harvard Fund. And essentially, they give us money with the hope of making them more money so they can give scholarships and preserve the wealth of those families. At HIG, we manage about $18 billion right now. The firm was actually started in Miami. Both of our founders grew up in the Miami area, went to business school and came back in the area. There's about 250 investment professionals spread out all across the world. And what's interesting about HIG is we actually have multiple strategies. So we go anywhere from mid-stage to actually much later stage companies. So a lot of what I do is in the bioventures team where it's more mid-stage opportunities. But as a company grows and we need growth equity or we need to be able to go and do leverage buyouts of public companies, we're also able to do that. So that makes the job really interesting because you can see the way we think about opportunities, if the company is interesting, we'll find the right pool of money for it. So as I mentioned, I work for the bioventures team. In the last year or so, within HIG, we've also launched a healthcare royalty and credit fund opportunity. So this is for more mature companies where we like the companies, but as was mentioned before, sometimes evaluation is not within where we find it attractive. So we have a very clear mandate from the people who invest in us, what kind of returns they want us to make for them. So when we can't get there from an equity perspective, we find other ways of getting there, and structured financing is one way that we do that. So as I mentioned, I work for the bioventures team. We currently manage about $400 million. We typically look to make investments of 3 to 20, but so the way we think about opportunities, when we invest in a company, we want to have enough reserves that we can fund you further and further. So we know you'll need 2 or 3 rounds of funding before you either an IPO story or before somebody else is ready to buy you. So we'll typically look to make investments of up to around $20 million per company. And how we do it can be different, 7 to 10 per tranche, 5 depending on the needs of the company. Now, where we like to think we're differentiated as a venture industry is that we not only make investments in the company, we actually help you build the companies. We have the benefit of sitting on multiple boards and seeing other companies, being able to build and sell companies. And so when we invest in you, we actually invest in the whole infrastructure of organization behind you. So whether you need to recruit management, we have teams of people we've worked with. We have successful executives who we've sold companies with that we can go back to and bring them in when we need to. We actually roll our sleeves up. That's why we're all scientists, all with industry experience. If you need to design a clinical trial, we'll actually sit there and try to figure out the best design for clinical trials with you. If you need a sales and marketing plan, we have executives within our teams who've done sales and marketing. So whatever the need you have, we'll work with you besides just providing capital for you. So what exactly are we looking to for when we're looking to make an investment? So we have a defined subsector, and this is HIG Bioventures. So HIG Bioventures is part of the big mothership, as we like to call it. We invest specifically in life sciences, but the rest of HIG is able to invest in other healthcare companies. So the subsectors we invest in is biotech, spec pharma, medical devices, diagnostics, and more recently we've been doing more digital health type investments. Our sweet spot in terms of investments, clinical stage, we want to see some human data before we'll invest. Sometimes it's 5 patients worth of data, 10 patients worth of data, but we want to know that the device works more than in whatever animal model you've tested it. Because as much as most of you have been in the industry long enough, know that a lot of those models actually don't translate once you start testing in human beings. And there are venture firms that do earlier stage investing, but it's just not the way our strategy works. And as I mentioned, our investments typically range from $3 to $20 million per company. When I talk about strategy, I just want to mention, even though we don't do earlier stage venture investing, we have a lot of friends at other venture firms who do early stage investing. And so a lot of times we'll see a company and we really like it. We're like, it's too early for me. And so I'll call up 5 of my good friends who work at other firms and say, I saw this company, I think it's really interesting, you should take a look at it. And it works the other way for them. So they'll see later stage companies and they'll call us and say, hey, this is really interesting, but probably a little too late for me. Can you take a look at it? I was asked to present some of the companies we've invested in. This is just a select number. This is within the BioVentures team. So Novadac is currently listed on the NASDAQ, was previously listed on the Toronto Stock Exchange. We invested in a prostate cancer drug, a company called Salmedics that we ended up selling to Cephalon. Alda is one of our favorite companies. We invested quite a few years ago. It's publicly listed. I think market cap close to $1.5 billion now. So it's a company that's done really well for us. And one more I'll talk about is New Wave Medical. Again, a company that we got invested in at the earlier stages, but we've been very helpful to them from a commercial stage, and the company is doing extremely well. We just did a secondary financing for them about a few weeks ago. So I was asked to present some perspectives on VC funding. We can do this now. We can actually. So the most important thing, I think, when you think about approaching us or approaching another venture group, one is your stage of the company appropriate for us? Because sometimes you're more of an angel funding type of company, sometimes you're more of an early stage VC fund. So I encourage you as entrepreneurs, before you approach a group, do some homework, make sure that the group you're approaching is actually the most appropriate group. And sometimes it's okay to say, hey, I'm not sure if you're the right people for me, can you take a look and say, can you refer me to the right group? And then once you've decided this is the right group to approach them, making sure that you have a very well prepared pitch. You'd be really surprised. There's so many times I get a deck, we get decks, 20, 30 of them a week. And there's so many times I look at a deck, I look through a deck and I can't even figure out what the company does. I can't figure out what the product does. Right? And so making sure that you have a very clear understanding of what's your idea. Most importantly, what problem are you trying to solve for? There's a lot of people who just have really cool ideas, but I'm like, are you actually solving a problem with the really cool idea? So making sure you've thought through what problem are you solving, and more importantly, you can actually communicate that to a potential investor. So when we look through the decks, it's very clear what problem you're solving for. Another thing is just understanding what's the market opportunity you're addressing. So as I mentioned, our mandate is to invest in companies that we can IPO, that we can sell to larger companies. And so we're looking for large unmet needs in large markets, because essentially that's how we're able to make the kind of returns that we need to make for investors. Having a very clear understanding of what's your pathway to approval. Are you a 510K, are you a PMA? If it's an FDA trial, what kind of trial do you need? What type of size do you need to have? Because when you come to me, that's the first few questions I'm going to be asking you about. I also mentioned the idea of management teams. We've met really good entrepreneurs, but having a clear understanding of if you're the right person for the company at that time. A lot of times people are going to get stuck on their baby and they don't want to let it go. And it's okay, we won't take it away from you, but we'll find you the right help to actually make sure that we can grow these companies to something that we're all proud of. Having a clear use of proceeds of financial projections. A lot of times companies will come to us and say, hey, I need $2 million, and say, oh no, we can't invest if you don't need $10 million. Like, no, I actually need 10. I'm like, do you need 2? Do you need 10? And so making sure you've actually thought through what exactly do you need the money for, and more importantly, what does that money do for the company? Where does it get the company for? If you want to IPO the company and we think we need some phase 3 clinical trial, have you budgeted enough money to get us the data that we need so that you're either an IPO candidate or Pfizer, Bristol Myers, whoever will come and buy the company? And most importantly, for us as professional investors, it's understanding what's the path to liquidity. How do we make sure that in 5 years, in 4 or 5 years, we see a way of either IPOing the company or being able to M&A the company, whatever the path it is that we chose. I saw this before, I think you mentioned it. Maintaining confidentiality around your data is extremely important. I've seen a lot of decks where there's all kind of data involved and people are just sending it around. So making sure you give away enough information to get people interested, but when it's appropriate, you make sure that there's NDAs signed. And most importantly, it's building your network. Always ask for referrals. As I mentioned, we do mid-stage investing. We know a lot of people doing angel investing, doing later stage investing. So if you're not the right investor for you, we're more than happy to make the recommendations to who you need to be talking to.